federal government just announced that GST will be eliminated for first-time homebuyers purchasing newly constructed homes at or under $1 million. This move could result in up to $50,000 in savings per buyer, depending on the price of the home. And while the announcement sounds pretty straightforward, there are several key details, exceptions, and timing factors that you need to understand. I'm Dan J. Reilly, and in this video, I'm going to walk through exactly what's been announced, what's still unclear, and what this could mean for you. So stick around to the end and make sure you're not missing an opportunity or walking into a surprise. Before we jump in, if you're a first-time home buyer or planning to get into the market soon, download my free pre-sale guide using the link in the description. It outlines exactly how pre-sales work, how GST usually applies. You can also book a strategy call directly with me if you need help figuring out the best path forward for you. Now, let's take a look at the announcement. So Prime Minister Mark Carney announced that the Government of Canada will eliminate the 5% goods and services tax, also known as GST, for first-time homebuyers purchasing new homes priced at or below $1 million. This new policy is designed to help more Canadians enter the market by reducing the upfront financial burden, which for many includes tens of thousands of dollars in GST added to the purchase price of the new home. Now let's talk about how GST normally works. In Canada, GST is charged on the purchase price of new homes and not resale homes. The amount is 5% of the purchase price, and it's usually paid on the day of completion, not when the contract is signed. Now here's where the policy gets interesting and where timing becomes important. Because GST is collected at completion and not at the contract signing, it's possible that buyers who purchase a pre-sale home today and complete this deal after this law is in effect may not have to pay GST, even if they signed before the law was passed. Now, that's based on how the law currently functions, and with that being said, it could be a unique opportunity for first-time home buyers who act early, but to be absolutely clear, it has not been confirmed. Always consult a qualified accountant or real estate lawyer to review your specific situation. There's also the question of how developers will respond. In the past, when rebates or savings have been introduced, developers have sometimes adjusted prices to reflect that. So we may or may not see all of the savings passed on to the buyer, especially if the market gets super competitive. Again, it's something to watch carefully. Here's what we still don't know. We don't yet know the exact date this policy will take effect. We don't know if it'll apply retroactively to deals already under contract, and we don't know if developers will adjust pricing or include any other clauses to account for the change. That's why I'm recommending that if you're a first-time buyer planning to purchase a new build or a pre-sale, now is the time to get informed, start planning, and understand your timing. Because depending on how this rolls out, the opportunity might be short-term and situational. To help with that, download my free pre-sale guide using the link below or book a strategy call with me, and I'll walk you through what this could mean based on your budget, your goals, and your timeline. Again, my name's Dan J. Reilly. Thanks for watching. If you found this video helpful, make sure you leave a comment, like, and subscribe. Also, don't be afraid to leave a comment with any questions you have below. I'm going to continue posting updates as soon as the government releases more details. If you don't want to miss out, subscribe below, and see you in the next one.